Thank you, Brian. And Mark, it is great to see you on this earnings day. As Brian
Great to see you, Leslie.
Thank you. As Brian just laid out, you had revenue gains, record Q3s in each of your 5 businesses, big jump in net interest income, and a lower provision for credit losses. So how much of that was all possible without the current macro backdrop?
Yeah, Leslie, first of all, thanks for having me. I'd start by saying what we saw today was a byproduct of us continuing to execute on our strategy. It also demonstrates the resiliency of our business model. Every one of our 5 segments delivered top-line record revenue growth. Top-line performance was up about 9% in the quarter. And importantly, if you look at year-to-date, our revenues were up 7% year-to-date. Each one of the businesses covering off on our institutional clients, like our services business, was up 7% as we're doing more with them in their operating deposits, but also with their trade financing and their clearing volumes and cross-border activities. We also saw strong banking revenues. Our investment banking fee revenues were up 17% with good M&A activity, good ECM activity, and DCM activity. And then on the consumer and wealth side, we saw similar strength in both of those businesses. Much of this comes on the heels of us investing in these businesses to drive top-line growth. And so we feel very good about that. We're well positioned to serve our clients. Earnings were up. We returned more capital to shareholders. And I think the market is starting to recognize these proof points that we've been consistently delivering on through the year.
On the broader environment, you mentioned on the media call earlier today that you felt like there were some sectors or some pockets in the market that you believed were frothy. Could you expand on what you mean by that?
I think when you look at equity valuations, they're up significantly. And I think when you look at that, you have to believe that there are certain sectors, given the multiples that they're trading at, that probably have some frothiness to them. As we see the uncertainty play out around things like tariffs, what that means for inflation, how the credit environment continues to evolve, what happens with unemployment, you're likely to see some leveling off in some of these sectors over time.
What are you seeing in terms of credit quality, and how are you thinking about it at this moment? I know you had, overall it was a great picture during the quarter, but just thinking forward, both in terms of Citi and industry-wide, because you have these Tricolor and First Brand bankruptcies that have really raised questions about whether the issues are contained to these 2 companies, contained to the auto sector, or a canary in the coal mine. And I'm just curious how you're thinking about that as you assess your own balance sheet.
Yeah, well, first of all, we feel very, very good about the risk appetite framework that we have. As you know, we tend to play on the investment grade side of credit risk as it relates to the corporate portfolio. So we skew much more heavily towards investment grade names. We also skew towards prime balances on the consumer side. We have reserves to the tune of $24 billion, 2.7% of a reserve ratio. So we feel very good about the reserves we have against the high quality exposures that we have. And that discipline is really, really important when you're playing into an environment that is as uncertain as this one is. When I look at the underlying factors for consumer, for example, the credit losses that we've seen this quarter have been consistent with the normalization that we've been expecting. The early delinquency buckets are showing no abnormal signs of stress. So we're watching that very closely, but we don't see anything in our book that is alarming. And similarly, on the corporate side, again, we have a very diversified portfolio across sectors. We skew towards the higher investment grade quality, and we're well reserved for the names that we have. So despite continued uncertainty in the market, we feel good about our exposure and our ability to continue to use balance sheet with our clients.